Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. And this is October 26, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, we had a tough week this week, but the market is just preparing for the election in a week and a half now, and it just is meandering, just doesn't know where to go. It goes up, it goes down, but don't worry about it. Go out and take your mind off the market and enjoy these beautiful sunrise. All right, let's look at the QQQs right now. And we got a sell signal up in here, and the thing is, we did get the sell, but it was one day. And then it bounced off this 20-day moving average in here. And then on Friday, as I'm recording this before the market closes, this index has moved up nicely, but it's trying to get past this previous high here. And right now, as I'm speaking, it's at 498, and the previous high was at 500. And so we'll see if it makes it. It had gone up to 500 and then backed off a little bit in there. So when we come down here, we can see that we got a sell signal on this intermediate term indicator, but then it's with today's action, I'm talking about Friday's action, it is trying to cross up above it. But we'll see what happens on Monday, folks. And when we look at the Dow is a totally different story. The Dow has come down, gave us a sell signal up here, and it was a good sell signal. And the market right now, as measured by the Dow, is below the 20-day moving average, can't seem to get above it. And down here, this intermediate term indicator is actually pointing down, no doubt about it. Now let's go to the oil and gas, and the oil and gas is doing nothing. It's generally pointing down, but today, come back up here, we did have a buy signal in here, and that's why we're rebounding today, and we're testing this green line, which is that 20-day moving average. So in other words, oil doesn't know where to go right now. And when we look at the energy, exact same story. We got a buy signal in here, and that's why the market's rallying today, right around that 20-day moving average. But the indicator here is pointing down. And I want to bring out one thing here, is that with the intermediate term indicator pointing down and going lower, and this ETF, the energy ETF, playing around the 20-day moving average, it's got a lot of room to go. So overall, this market looks pretty good, even though we're not getting buy signals in here. Well, we've got the short-term buy signal in here, but we're not getting any buy signals on the intermediate term indicator. And the XLK, which is a technology indicator, same type of thing. It doesn't know where it wants to go. It wants to try and reach this previous high up here, but today it's not going to do it. So we'll see what happens this coming week. And then with the semiconductor, same thing. Semiconductor looks better, and it is above the 20-day moving average, held in here. You can see all the testing that's been going on around the 20-day moving average on all the indices and all the ETFs, and now we're getting a nice rally to the upside. Looking at the transportation, well, the transportation is going to either lead or slightly follow the Dow Jones, because the Dow Jones is a measure of the largest companies, the industrial companies. Well, it's got some other type of companies in too. At one point, it contained 80% of the output of the nation in those 30 stocks. This was quite a while ago. So you can see how important it is. But the transportations really have to get involved, because the transportation tells us which goods, raw materials, are being shipped to the manufacturers, and then the manufactured goods have to be shipped to the warehouses where we push a button on Amazon and they send it to us, or to the retail outlets like the malls and the individual stores. So is this thing going to bounce up? We won't know for a couple of days now in here. And as I said, we have that election coming up in about a week and a half, and folks, the market just doesn't know what to do. And when we have the utilities, same thing. The utilities had a big run up in here, one of the best, and we're going to look at that right at the end. Then it had rising interest rates. Interest rates went lower, and now they're starting to rise again, because the bond market is saying, okay, we're only going to get a 25 basis point cut in November, and maybe that will be the last one. So the bond market's having a little problem here because interest rates are creeping up little by little, and the utilities have flattened out in here. But down here, the intermediate term indicator is pointing down once again. And healthcare, well, healthcare, folks, don't know why, just cannot get out of its own way. It is looking terrible in here. And the stocks that we all love, and such as United Healthcare, etc., all the stocks that we love are not doing well. And this indicator down here is really getting oversold. So maybe we'll see something over the next week or two where it turns around and gives us a bounce. But you could see it's heading toward the 200-day moving average down here, which is quite a little ways from where it is now. So there could be some more pain in the healthcare coming up. When we look at the industrials, which we looked at last week because we had such a nice rally, then it flattened out last week and now it's come down. And you can see, along with the Dow, the industrial sector ETF is pointing down. So we have the industrials pointing down, which indicates a slowing economy. And maybe they're thinking that, or maybe the market participants are thinking that with the slowing economy, we're not going to grow nearly as fast. And also this week, I think it was Goldman Sachs came out and said we're only going to see 3 to 5% growth per year, where in the past 10 years we've seen serious growth, well, about 20% per year on average in the S&P 500 over the past 5 years. They say we're not going to see that over the next 10 years because we are so in debt that we're going to have to raise taxes one way or the other. That will slow down the economy as you take money out of the investing end of it and you put it into just paying the debt on our huge debt. In other words, paying the interest rates on any increase in interest rates for the federal debt, because the federal debt hates rising interest rates because more money goes toward interest than it does to paying off the debt. That's why this market is worried. Now let's see which ones of the ETFs are doing the best this year. So these are the leaders year to date. And we can see the XLU right up at black line again is the S&P 500. Up here is the utility ETF, which is leading the way. And that was because interest rates were going down, and now they're starting to climb back up a little bit. So we'll see if this can hold in here. The blue line are the QQQs. So the QQQs, the tech stocks, are doing as well as the S&P 500, and the XLK, which is the red line, is the tech sector. So we have the QQQs, which are tech and semiconductors, or mostly tech and semiconductors, and the XLK, which are the techs, keeping up with the S&P 500. But we're going to look at our portfolios. Now, we remember with our ETF portfolios, we pick the best stocks out of each ETF, and we have our sector stars, which are our best ETFs and stocks out of those best ETFs, and then we have our top stocks in the QQQs. There's about a dozen of them, and where they are, and you can see that they are up around here. One is up, we're going to see it in a second, one is up 39%. Just can't break into that 40% level, but it's up here, and you can see that by picking the better stocks in these ETFs, we are outperforming not only the S&P 500, but we're outperforming even the best of the best ETFs. So we're up here, folks. Very, very nice. And in fact, here they are. These are the sector stars. There's about 18 stocks in them, and unless you have a subscription to the ETF letter, you don't get to see the name of these stocks. But here they are. Here's the return, up 34.9%, up about almost more than 1.5% from last week. So they're doing very, very well. Here are the QQQs up 21.8, S&P up 22.9, and our top stocks up 34.9%. Folks, we're close to doubling, well, not quite, doubling the other averages out there. And don't forget, the QQQs are one of the best performing ETFs, as we just showed. Let us look at the top stocks in the NASDAQ 100. Again, 21.8% for the QQQs, S&P 22.9%. Our top stocks, our top dozen stocks, up 39%. As I said, we just can't break into that 40% area. But folks, we are just about doubling everything else that's out there. So this, and over the past 5 years, these stocks have just totally blown away the S&P 500, the Dow 30, the QQQs. Folks, it's, you pick the best stocks in any ETF, and 90-some% of the time that you're going to outperform that ETF. In fact, with us, it's just about 100% of the time. But we can't say 100% because somebody's, out of the several thousand of the ETFs out there, there's bound to be one that we can't outperform. But right now, all the ones that we handle, that we look at, we are outperforming the ETF itself. So again, QQQs up 21.8%. The top stocks in those QQQs up almost 40%, almost doubling. So that's where you want to be. You want to be in the best stocks. And the clean surplus methodology is the best way to pick the stocks. And we've proven that over the past 22 years, folks. Yes, our track record is 22 years long, and I don't see anybody out there that's boasting a 22-year track record. So here you go. This is why, because they have to compare with us, and they're not able to. So, folks, again, we had a tough week this week. The market doesn't know where it's going to go because of the election coming up. Are tariffs going to be better for the market, or are higher taxes going to be better for the market? Actually, neither one of them are going to be better for the market because we are in such debt as a country that somehow we have got to pay that debt. That's why the market is starting to stand still. It's near all-time highs, but right now it doesn't know where it wants to go. Got to wait for the election, and then it still probably won't know where to go heading into the holidays, but usually we have an upward bias. So, folks, let's see what happens. Go out, have a great weekend, take your mind off the market, have a Sunday dinner with your family and loved ones, and, folks, we'll see you back here in a couple of days.